The shaky economic recovery has the Federal Reserve considering more action. We have John Hilsenrath here in New York with us this morning to tell us more. Thanks for being here.
Kelsey.
Good
Thanks
morning.
For having me here.
Great to have you in person instead of on the monitor from
Remotely.
Washington.
Right. Yeah.
Joining us in New York. So this month, the Federal Reserve will weigh whether the U.S. economic outlook is continuing to slowly grow and emerge out of the depths of the recession that we had over the past couple of years, or not? Has it stalled?
So, they've got some tough decisions and evaluations to make. They're looking at an environment where unemployment has stopped falling basically for the last few months, and payroll job growth has been very slow. Financial markets have become more strained. There's more worries about Europe, and there's also the fiscal cliff. So the environment doesn't look as rosy as it did a few months ago, and what they've got to decide is, has the economy stopped making progress on bringing unemployment down? It's not an easy question for them to answer, and I wrote about this today. I wouldn't conclude that this means they're going towards new actions to spur growth. What it means is that they're talking about it. It's on the table. And it really wasn't a couple months ago.
So what are their options at this point exactly? If they decide that, in fact, things have stalled more than they had anticipated, what possibly could they do at this point?
Well, there's a number of different things they could do. The first step they have to do is have a conversation about what's happening in the economy. So first thing they have to do is decide, have things really stalled out? Have they really slowed down? And by the way, I would look at a speech today by Dennis Lockhart where he really lays all of this out. If they decide that the economy is losing momentum, then there's a number of things they could do. Some of which are verbal. They can say they're prepared to act if they become convinced that progress isn't being made. They could take some interim steps, precautionary measures, so to speak, like continuing this Operation Twist program for a couple more months, for some short period. And if they get real worried, if they're convinced that we're going into another stall, they could bring out another bond buying program, quantitative easing. But I think we're not there yet. There are a lot of steps they have to take before they get to that big gun, which everyone in the market is so excited about.
And does the looming presidential election play in the backdrop of all of this, of them taking any action?
Well, I would say that the election is in the backdrop of this. The question is whether that will influence Ben Bernanke. I tend to think not. This is a person who's got 18 months left at the Fed. His term ends in 18 months. I doubt that he would want another term. I think that he's probably, that he's always been at a point, but he's especially at a point now where he just wants to do what he thinks is the right thing, and he's going to try to look past. He's going to get attacked no matter what. I mean, we can be sure of that. And I think that's got to be his calculation, that no matter what he does, damned if you do, damned if you don't.
Right, and we just saw a graphic of interest rates. Obviously, how much of a focus is this? What are people obviously going to be concerned about that? You can see it up here, the Fed funds target rate, 2002 to the present. Obviously, that's something closely watched. What do you make of that?
Well, this raises another option that they've got, which isn't a great option at this point. Is one of the things that they've done to try to ease financial conditions is to say they're going to keep that rate down near zero all the way through late 2014. The latest batch of bad data, what it means is that they're certainly committed to at least through late 2014. They could extend it into 2015. I think there's some doubt at the Fed about whether going any further out would have much of an impact, because we're already talking so far out in the future.
And mortgage rates, obviously, people closely watching those at lows as well. So
one of the problems that they've got is that lower mortgage rates are great if you can get access to credit. If you've got a high FICO score, this is a great environment. Millions of households have low FICO scores now because of the housing bust and upside down mortgages, and they can't get access to those low mortgages, and that's something that really worries the Fed.
And there's some conflict within the Fed about whether or not they should move. So how closely do you think people should be watching the speeches as you talked about, and really the bank presidents kind of disagree on really what they should do?
There's an immense amount of disagreement, as there has been for several years now. Richard Fisher, who's known as one of the hawks, was out yesterday saying it wouldn't do any good and could add to the public's confusion about what Washington is up to. Charlie Evans was out yesterday, the Chicago Fed, saying that they should do more. This is why I think it's important to look at Dennis Lockhart's speech today. He is a guy who's at the center of the committee. He doesn't have dug-in heels on either side of this debate. And what he's saying today is that he's become a little bit more concerned about whether they're making progress. He's concerned about the risks, and he's going to be evaluating this, and that further action has to be considered, again, on the table. They haven't even had a meeting yet. They haven't made a decision to do more. I want to be real careful about saying this because I think some people think that as soon as they start talking about it, that means they're going to do it. I think they're at the point where they're saying, where does the economy stand and is there anything we can or should do about it? Lockhart gives a really good overview of that today.
All right, we'll be watching for that today. And also June 19th is the upcoming meeting. All eyes, of course, will be on that. Thanks, John.
And the 20th, that's when the big date is. Yeah.
All right.